All right, guys, here we go. Real quick look at Bitcoin and where we started and where we're possibly going. And let's just kind of zoom in here. We were in a consolidation phase last week, and then, of course, Tuesday of this week had the breakout. Amazing follow through yesterday. And then currently today, most all markets are down, so not really worried about this. We're putting in a potential topping tail here where you see the let me pull this up, the wick of this candle is beginning to sell off a little bit. We do have a high pivot resistance zone, previous resistance. We're currently on top of it, so we'll see if it holds a support or if we get back under it and have to, fight our way back over that zone. And this candle is setting up, even though it's green, it's setting up similar to this one, kind of a topping tail candle where after a push to the upside, you get some sell off here, and it's kind of an indicator or a kind of a red flag, obviously, that the potential to roll over is getting higher. Okay, so that's kind of what we're looking at. And after this like amazing run, yeah, we do need to pull back. We're getting a little extended over the 20, this blue line, simple moving average. And then right here, high pivot, both resistance zones. So if and when we pull back, we're looking at this area at the blue dash line around that 23, 760, let's call it, region for a, potential safety net support area. And then if we scroll over, going back to this region of August of 2022, we're looking at this high pivot region, consolidation region where we had, again, topping tail, a few of them right here signaling a little profit taking and then the rollover. Okay. And then more, and well, my more important chart, let me show you the weekly here. And this is the main, uh, uh, let me get it on the weekly. This is the main um, chart we like to look at, especially potential, breakouts. And also when we begin to turn and make that market movement from a bear market to a bull market. Okay, we were in this descending wedge, high odds, high percentage of the time. They do either consolidate sideways out of the wedge or they break out real hard, real fast, like we did here. Okay, now there's three factors here that's kind of holding us back, holding us down. And we just had, the quote unquote death cross of the 50 weekly simple moving average, the green line crossing down and under the 200 simple week moving average, the purple line. Okay. Now, this is a very, I don't know, it's not really that important to me because it's a very long lagging indicator. We started pulling back and getting under the 50, way back here in the end of 2021. Okay. But here we are. The main focus right now is getting over this high pivot previous resistance area along that red dash line, which we're, as we looked at on the daily, we're barely over it, but I suspect we could, pull back under it and look for support, below that red dash line. But currently, what we're dealing with, and all that matters, quite honestly, for this week, because this is a weekly candle, is whether or not we're going to be able to close up and over the 50 and the 200. We had through, Sunday evening to do that. And as you can see, even right now, as I'm talking, this is, pulling back a little bit. But and yeah, these are two big resistance zones, the 50 and the 200. It doesn't matter what chart you're on, an hourly chart, daily chart, or in this case, a weekly chart. However, all they would have to do, the powers that be, okay, if they really wanted to just accelerate and blow the price up, probably coming up into this high 20, maybe even 30,000, probably $30,000 zone pretty quickly, is to put a few $100 candle in here. Yesterday we had a $2,000 candle, and just a few $100 here would take us and close us above the 50, above the 200, above that quote unquote death cross, and we would be, rocketing up to 30,000 pretty quick. And the reason I say that because everybody and their brother that's a bear, that's wanting to be short in the market, is dogpiling in right here, right now. And the market always does what hurts most. In other words, the most people, the most, retail investors, and what hurts the most financially, okay? And to me, you always got to think like a criminal. And popping up and over this area, probably really getting a, 25,000 plus, but 25,000 would do it. Weekly close, okay, Bitcoin at 25,000 for the week would blow us up next week. Okay, could really do it. So anyway, and then also this is a what we teach on our Patreon member side. I'll give you one little tip here. This is considered a two down, one up. You can look throughout your charts from a 2 minute chart, hourly, daily, weekly, whatever it may be. And these are amazing. Okay. I know people that only look at this pattern, look for this pattern, and they make a good living off of it. Okay. Just one pattern, because 83 to 87% of the time, you get follow through on here to the upside. So as soon as what it is, just two red candles closing down into a green candle, and you're saying, well, Joe, there's not a one green candle over here, it's several. Well, you got to look at it like this, okay? From down here to the top, that's all one green candle, okay? Technically, that whole move, okay? So that's a pretty strong move. And the more shallow the pullback here, that'd be one thing if we pull back way down here, the chances of coming back, up here pretty quickly, are not very high. But a very shallow pullback like this into a big green candle, technically, you do get that breakout here the next week or the next day or the next 2 minutes, depending on which chart you're looking at. Then you get an acceleration back up to the upside. So it's going to be very interesting Sunday, how we close, or maybe even before that. Hopefully we don't even have to wait for the weekly candle to close. We can get that on the daily or what have you in the interim above that. But anyway, guys, thanks for watching. Check us out on Twitter, Crypto Charts Joe, and our Patreon member site our group that I'll link below. And we will see you on the charts.